What's up, everybody? It's Stephen A. Williams, president and founder of thecreditrepairshop.com. And in this video, I want to talk about something that uh, may not be in your awareness, but you've seen it all over TV. Heard it on the radio. You've seen it on the internet. It's all of these different ways to boost your scores. And they've came out with Rent Reporter. They've came out with Experian Boost. uh, all of these different ways that you can report, self-report things that you're paying payments on, which is a good thing because people have been paying on different apps and paying their rent, paying other things like cell phone bills that was never reported to their credit reports, and it gave them boost, and it was something that people deserve to have if you've been spending your hard-earned money making payments every month. But then there's another side of that I didn't even think about until the other day when I was looking at one of the client's credit reports, and I was like, if this was a good thing that they allowed this to be reported, but then there's another side of it that actually can hurt the customer. And I didn't even really think about it because I'm always thinking positive. Let's get these things on people's reports, or those different products that came out. It was helping people's reports go up. But then I looked at it and I was like, wait, the way the algorithms are written, what would happen if, number one, they stop reporting? So like they only reported a certain piece of a certain product, and then they didn't report. Would that hurt the individual? Would that actually hurt the time period when they say how long you've had a certain account? Would that actually hurt the individual? Or would it hurt if someone reported 24 months of rent and then they had a gap and then they reported another 24 months of rent? Would those gaps hurt? Because if you think about it, the way that the algorithms are written with TransUnion, Equifax, Experian, and any other bureau that's out there, is they're going to look at the consistency of what's being reported. Because if there's gaps, they're going to say, well, we're going to have a dip. But then I thought about, what are creditors going to think about it? Say you're going for a mortgage and you were a renter and you had, like, I'll just give an example. One of the rent reporting services allows you to put, I think, back up to 2 years of your rental history on your reports. So you put 2 years of your rental history on there. You have a little hiccup, so after that 2 years, maybe you moved, or even you're with the same rental company, but you had some troubled times during COVID, or maybe job issue or medical issues, and you decided not to have that portion reported. And then you go and, later after you got stuff back in order, finances are good, and then you went ahead and had it re-reported, and there's a gap in between. What are creditors going to think about that gap? How are they going to rate you? How are they going to look at you during the underwriting process? These are questions that we really don't know right now. So there's a good side and there's a bad side to self-reporting, and we're going to have to wait to see how that's going to pan out, because if you are logical, like we logically thinking, when a creditor is looking at your credit reports to make a specific type of loan, it could be a mortgage, they're going to look at consistency. And if there's any irregularities in that consistency, how are they going to react? Are they going to just straight out deny people? Or are they going to get an opportunity to explain? They're going to say, well, why didn't you report here, but you reported at the front, you didn't report in the middle, and you reported in the back? How are those gaps going to play out when it comes to underwriting processes, especially when it comes for getting approved for a mortgage. Now, I don't think that it's going to matter if you're going to, trying to get a car, maybe even trying to get a credit card, those types of things. I don't really think that it's going to matter on those. But it could potentially matter when you're going to try to rent if you're trying to rent an apartment, rent a condo or something like that, and it's most definitely going to play a part when you're looking at going to get a mortgage. Now, I want to talk about the debt that's being released into the market. Over here, let's see. Well, right here. There we go. Debt that's being released into the market. We need to talk about this because LVNV funding, Resurgent, Portfolio, Midland Credit Management, or Midland Credit Services. They got different names, but it's Midland. These companies are going crazy. They're buying up all of this debt. I just did one yesterday, a summons response for a client where they were actually coming after her for debt that was past the statute of limitations to even be able to collect. Let me tell you why they're doing this. With COVID, we all learn, there's different things that we learned during COVID. Some people learned you can work from home, and things were rolling on track. Nothing went off the tracks from working at home. We learned a lot about ourselves and different things. Well, debt collectors also learned something. They learned that they don't have to go out and hire other debt collection companies in other areas. What they did is they said, hey, we could do all of this stuff by Zoom. That means that we could just centralize everything right from our office, from whatever state we're in. We just get licensed to do business in that state, and then we could do a Zoom call and go after people for all of this debt. And they know that this is very profitable because they said that the Consumer Financial Protection Bureau states that upwards of 75 to 80% of the people who get sued by these companies for this type of debt will not show up to court, and they will get a default judgment. Also, something that they learn, the debt collectors learn, which is incredible, and some states are utilizing this, is that they're making people pay an appearance fee. So instead of you just being able to walk into court, they're making you pay an appearance fee so you can do it from your home. Now, I'm here to tell you what you need to do is you need to go to court no matter what. Go to court. Even if it's a Zoom, they're going to put you in a room. They have to do this. They have to put you in a room, and they're going to put you in front of the computer. The judge is going to be in another room. The plaintiff attorney, Midland or Portfolio, whoever it is going to be if there's somewhere in a whole nother state probably on their computer, and they're going to just call your name. And if you show up and you have written your responses to them to defend yourself, more than likely they're just going to say dismiss, because they're not even in the room. It gave them a upper leg on being able to go after more people. But when it comes to fighting, when you are in your state and they're in another state, and you're putting your defenses down on why you believe you should not have to pay a debt collector for a debt that they purchased, they will most likely dismiss the case. We've been having a lot of victories with this. I'm talking about a lot of victories where they've called people up and they just said dismiss, or they said we just need more time to go through this, which means they're going to just probably say we want to dismiss it. They just want to see if you're going to show up to the next one. Now, other things to be aware of: if you're not able to make it into court for whatever reason, you can get a waiver to where you don't have to pay that fee. In the state of Illinois, one of our clients had to pay a fee of $235, an appearance fee. That's ridiculous when you're the one that's being sued. So they're going to make you pay an appearance fee. You can get it waived, but you got to go through all this trouble. The best thing is just to go to court where you show up. They're going to take you into a room, and then you can have your responses. You give them to the, you submit that earlier than going into court, and then you have an opportunity to win your case, get it dismissed. Now, let's talk about the debt that's being released on the market. We got over $206 million, 10,000 accounts. The charge-off date, average charge-off date is 2004 to 2009. The average balance is $8,961. That's incredible. Another group here, $92 million, 10,000, over 10,000 accounts, 2,000 to 209 on this one. Oh no, this looks like this is the same one. It says here the same. Oh no, it's a different one. It's a different one. Just the average balance is just the same. That's crazy. Here's another group here, $184 million, 24,000 accounts. Average charge-off date is 2003. This is past the statute of limitations to collect in all 50 states. So don't be fooled. And I'm going to tell you at the end how you can deal with this before you even allow them to take you to court. As a matter of fact, they can't even take you to court anymore for time-barred debt. So what they're going to try to do is to go back to doing the dirty tricks to get you to reclaim the debt. So be very careful. Never reclaim a debt by making a payment of 1 penny. Because if you do that, you're initiating a new contract and you're starting the time-barred debt all over again. Another one here, $53 million, 22,000 accounts, 2003 charge-off, 2,400 is the average balance. This one here is $170 million, 17,000 accounts, average charge-off date 2001, $9,864 on that one. 38 million, 1,748 accounts, 2007, 21,000. This is probably repo, automobile repo debt. Here's another group here, $445 million, almost $500 million, 55,000 accounts. Does not have a charge-off date, and it's a 2020. I'm sorry, 2020. 8/13/2020. Okay, almost $500 million. Average balance $7,900. This one here, 28 million, 2,300 accounts, 2005 charge-off date. This one here, this charge-off date and this date here, this is a new batch of debt. This here is a new batch of debt. Be careful if you're out there. That's mixed accounts. When they say mixed accounts, that's going to be mostly credit card and payday loan type debt. Here's another group here, 76 million, 5,300 accounts, 2008 to 2011, 14,000. Pretty sure that's probably going to be automobile debt or credit card probably. And then this one here, 23 million, 2,400 accounts, charge-off date 2005, 9,700 on that one. So now, first, let's go over what's going on with these debts. If you've been watching the news, if you see any stuff from news agencies that talk about debt collections, some of them skip it. You might have to go online to look at it. Debt collectors are buying up billions of dollars worth of bad debt. The credit card companies and medical, all of them. You saw that medical debt is not even going to be able to be on a report. So a lot of these companies are going to start discharging and just, because if they can't hold it over your head for having on your credit reports, it's going to be less likely that they're going to get it collected unless they go and get a judgment against you. So what they're doing is they're, making decisions in their back rooms. They're saying either we're going to sell off a certain amount of debt or sell it all or whatever. So you're going to see a lot of debt that's coming onto the market that is being purchased that is not past the legal statute of limitations to collect. So you got to be very aware of what you have to do when you receive that 30-day letter, because you can stop collectors, most collectors, if you respond to them the right way with when they send you that first 30-day letter. If they purchased the debt, this is the time period where it's like they're coming up to your door. I'm not talking about a summons, but like they're coming up to your door and they're like, I hope that they don't know the laws, and we're gonna just mail them that letter and then see what happens. Most people don't respond, and they're like, yay, we get to put it on their credit reports, and even if they can put it on the credit reports, they can go after you in court if it's not past the legal statute of limitations to collect. But they got to go through some stuff before they get to the court part. But what you need to do, you need to be aware of this. No matter what, when you receive a collection letter, step number one, you need to go to my website, thecreditrepairshop.com, and at the bottom, all the way at the bottom, has my blog. Click that, and you're going to see a search bar, and you need to type in statute of limitations or statute, and it'll bring up a page, and it's going to have the statute of limitations for all the states. So let's pull it up here. I'm going to see if we can get it here. Well, I should have had that page already ready for you, and for some reason it's not showing my search on here. But you need to have, let's see if we could do it here. That's crazy. I don't know how to do my own board here. But so what you do is you go here, type in statute of limitations, that page is going to pop up, and you're going to see 4 columns. Column number 1 is going to be for like repo debt, loans that you have. Everything except for student loans can be under that statute of limitations to collect. And if it's past that date on that side, you don't have to pay it. You just got to simply send them a letter notifying them that it is past the legal statute of limitations to collect, and I'm going to give you that letter. And column number 4 is opened-end accounts. And these are accounts that are credit card, department store type cards, where you could charge, pay it off, and charge again. Though usually in most states, the statute of limitations on those are a lot shorter than it is for regular debts. And so if it's past legal statute of limitations, no debt validation is required. All you have to do is send them the letter that I'm going to give you below this video, and you send them that letter and you tell them, hey, I'm notifying you that this debt is not legal to collect according to the laws of our state, and they will leave you alone. If you don't do that, you're going to give them permission to place that information on your credit reports, and you don't want to get into that situation, because then, even though it's not legally able to collect, you got to go through the issue of getting it taken off your credit reports. Next, if the debt is not past legal statute of limitations, which is what a lot of people say, well, Steve, the debt that you showed, most people aren't going to even have to deal with that. They're mostly going to deal with debt that's not past legal statute of limitations to collect. Well, yes and no. We got a lot of people that run into this problem, but yes, most of the debt that you're going to receive is not past legal statute of limitations, but it still has to pass a validation process. So I'm going to give you a letter, my cease and desist collection activities letter. That letter will stop most debt collectors, because there's certain things that they have to be able to move forward to go after you. Now, they may not have it and they'll choose to go after you, but at least you're putting them on notice, and most debt collectors will stop when they get this, because they're going to be like, this is not a fight that we want to get into, because if we spend money on this person and they know this because Steve gave them this information, they're going to say we're going to lose. So why deal with them when you got thousands of people who won't respond? Let's go after them, the easy people. Not to say that they won't, but more than likely they won't come after you. So I'm giving you my cease and desist collection activities letter, and then there's a debt validation letter that you may need to use if you get into a back and forth with debt collectors. Now, these are some exemptions that people don't usually know about, where you can stop a debt collector from even going to sue you, even if they can legally collect the debt, even if the original creditor hired the debt collector to come after you for the debt. Some of the things that you need to be aware of, where you may potentially be able to force the debt collector into doing a 1099-C cancellation of debt, is if you have medical issues, if you had a severe job loss where you just don't feel that you're going to recover, and you have proof of that, where your income is just, maybe you lost a business and you're working somewhere, or you lost a job, your company shut down and you're working for considerably less than you used to make. These are things that you can actually get a company to say, hey, there's just not going to be a way that we're going to get this money. Even if we sue them, we're not going to be able to get it. If you're a veteran and you've, you have proof that, obviously you would have proof, you will not be able to be sued. They will not be able to collect that money on you. But a lot of times veterans get sued because they don't even make them aware. They'll have on their lawsuit that they are not aware that the individual is a veteran. But we've seen plenty of veterans get sued, and some of them are even overseas. And so they may say that we're not aware, but you don't know how they check to see if you were a veteran. So if you're a veteran, you cannot be sued. If you're on if you're on unemployment, potentially, but if you're on disability, no. And that could be disability because you got hurt at a job, or and that would be ended up being permanent disability. Or if you're just strictly on disability or retirement income, you're not going to be able to be sued. But you have to get that stuff to them, or they're going to keep coming after you if you don't do it. So below you can get those letters. The links are below my video. Now, if you need help with your credit, please visit us at thecreditrepairshop.com. Watch the video, What Makes Us Different. That video is in the middle of my website when you go there. And that video, number one, is going to show you my process for repairing credit. Other people have their own process. I'm going to show you mine. And you just watch these videos. One of them shows proof. This video right here show. You may have a question, Steve, what type of stuff can you get off? Can you get this off of my credit report? Can you get that off my credit report? Bankruptcy. Can you get a judgment, collection, medical bills, credit card debt, all of that? Can you get off my credit report? This video here I made some time ago. It's 1 hour long. It shows, these are my clients, what we got off of their reports. They emailed that stuff back to us, and we show what we got off their reports. Also, I show where we got forgiveness of debt, well, we'll say cancellation of debt for a client, $34,000. I show that on there. On this video, I show you my 8-point validation process and my 2-phase settlement process to repair credit. And then here's that video, What Makes Us Different. Everybody say, well, what makes you different? I can't explain it all to you right here. I can explain it in this video, but I could tell you briefly what makes us different is that we use a 2-point process. We go after furnishers and we go at the bureaus. That if that was my elevator pitch, That's my elevator pitch. I'm the one that made up that type of process. Other people are trying to copy it, but they don't know what they are doing. Uh, when you know, let's talk about, yeah, we offer money back guarantee. These are types of things that we can get removed off your credit reports. When you sign up, you will see, before you sign up, we let you see what's going to happen after. A lot of people, when they sign up for anything, when they buy something, unless it's something that you're going to walk right out of the store, you want to know what's going to happen, like what's the next steps. Well, I tell you the next steps. I tell you exactly what's going to happen, so you don't have to fear, if I pay Steve some money, what's going to happen next. Can I talk to someone? Is this just an internet business? Is it just Steve in his basement, you know, fixing credit? No, I have a full-time staff. If I'm not available, which most of the time, I'm going to tell you up front, I hired people full-time to take care of customer service, because I would not be able to do a great job for you if I was doing all of the work myself. What I mainly focus on is the strategies to work on getting stuff removed off of people's credit reports using the laws. That's where I keep my focus at, and I pass that down to my customer service team, and they do that work. They do that day-to-day activity work, and that should make you feel a lot comfortable, because you can actually talk to them. You can actually email them. You can send stuff, but also you can communicate within the portal too. To get started, only $9.95. We basically do that because we want to make sure that you're serious. We're going to do the work before you pay for your service fees, any of your service fees. We have different plans: $47.92 bi-weekly, $95.84, or $191.66, and couples can pay $19.99 and $174. 6 payments to $174. So you might be saying, Steve, okay, what if it takes longer to repair my credit? This is only going to be like 6 months of payments. If I take this plan, that's going to be 3 months of payments. So what are you going to do for the rest of the period if it takes my stuff longer? We're doing the work for you. We're continuing to work for 1 full year. Think about that. Other companies, they just keep charging you. We just charge one flat fee, and then we continue doing the work if it takes that long. So I would reverse that and say, hey, what if we get you done before you finish paying our fee? Are you going to stand up for what you signed up for, which is to complete? We just had a customer, and I'm saying this, but this doesn't happen all the time. But we had a customer that got completed within, I think it was 2.5 months. Had a lot of stuff on there, and done. And also, I'm putting that on my website. This guy made it into the 800 club. We don't have too many people make it into the 800 club after we finish their credit. And you make it into 800 club by getting negatives removed, but you got to have other good credit that we're paying on. Made it into the 800 club, and we got done with his stuff before his payments were finished. And so it was our opportunity to say, hey, you do need to finish paying us. You can either pay it off now, or you can just continue with your plan, because it could go both ways, where we finish early and we do expect you to continue paying us because the benefit outweighs what you're going to pay us. I mean, you're just paying us. Total fee per individual is only $584 to my company. And so if it's shorter, we do expect to get that payment, the rest of those payments. But think about it this way, and you know this, if your credit is tore up, what if it takes a little bit longer? What if it takes 8 months? What if it takes 9 months? What if it takes 12 months? Well, you're still getting services up to 1 year for that one fee. 1 year. Name any other company that does it that way. I think that that's why our customers love us, is because they're like, hey, I did finish making payments. And I remember a call came in the other day, and she said, because I just finished paying, are you going to slow down on working on my stuff? Because she's getting really good progress. And I heard my customer service rep say, no, we're it's business as usual. Just because you finish paying us doesn't mean we slow down on the process. We continue working hard for you because that's what you expect and you signed up for that, and we're going to give it to you. So if you want to sign up with our credit repair service, please go to the website, www.thecreditrepairshop.com. Links are below this video. If you need your credit reports and scores, because it's very important to get your credit reports so you can know where you're at, and so we can know where you're at, and you know where your starting point is, so you can grade how we're doing, or if you're just trying to do it yourself, so you can grade where you started and where you're at and where you're finishing. Go to the website, you're the number 3 scores.com. Grab those credit reports and scores. If you have debt collectors coming after you, like we discussed earlier, get my 3-pack of letters. It's going to be 3, but you're only going to need to use one of them, either statute of limitations or time-barred debt. That's what they mean by that. You might have got a letter from a debt collector that said the debt is time-barred. That means it's past statute of limitations. They have to tell you that. You only need to use that letter. No debt validation is needed. The next one is the cease and desist collection activities letter. If you have a debt collector coming after you, this letter can stop a debt collector from coming after you, even if it's not past the statute of limitations. And then the debt validation letter. Use that letter to go back and forth with debt collectors. And you'll see how that works when you send that first letter. You might be saying, well, how's it going to work? You're going to see how it works. They're going to say we're going to stop, or they're going to come back with some questions, and you're going to be like, I can tear this argument apart right now. All right, so thank you for your time. Make sure you like this video. Make sure you subscribe to the channel. I really appreciate your time. I know that you could be doing other things. This is Stephen A. Williams, President and Founder of thecreditrepairshop.com.